Good morning everybody, welcome to Stockradar Stocks in America for another week. Today's date is the 19th of December 2024. My name is Richard Lee and I manage the Stockradar.com.au website for you. Okay, well, Christmas is here. Santa has delivered a great 2024 present to us all, amazingly enough. So we're grateful for our spoils this year. Good follows bad, and after a Dow 21-23, 20 and 24, the market leapt back into form, delivering an historical outperforming year, which has been amazing. The pattern of behaviour continues as usual. Okay, so you can see our little swag there. It's all full of a few good stocks for our Christmas stocking this year, which has been really nice. And there's plenty of other ones there we've got this year, which has been amazing. We know the breadth has been that good. We've only roughly covered about 50 stock picks out of 150 stocks for most of the year, which is about where it is now. So although the market breadth has been thin, there's been some really good performers in there for us to have a look at. So let's go to the top 10 and have a look at a couple of them at the moment. We've got CMM and GMD still at the top there. A couple of small miners just kicking goals there. SVW's an amazing year. SQT, it's bouncing back block. It's doing okay at the moment. We've got ALL, terrific trend. ASX has just broken up, as is BRG to new highs. CPU, a rocket stuck under this one when it broke through the new highs. And we've got Gold Road Resources and JB Hi-Fi pushing that at $100. So there's a few more stocks in the top 10s there, in the top ratings, but there's a few for you to have a look at the moment. And you can see computer share there. When it rallied through its all-time high, it's just a monster rally and it's been looking pretty amazing. So that's been a great story. Okay, stock pick update and all this bullishness at the moment. We've actually lost 3 stocks this week. One was a major bank and a couple of other stocks there. So interestingly enough, there's a bit of selling happening there. Still 50 stock picks of 153 stocks, 17 ETFs of 24. Okay, so now let's get to the overseas markets. And first I'll start off with the Dow Jones. Nasdaq. Dow Jones Industrial Average, okay, so a pretty bad week there in the Dow. In the scheme of things, it's not that bad, but we're certainly wary of it. We can see some volume appearing there, which means the sellers are challenging the buyers at the moment. So you see how far it comes down. We look for support level, and we see if the market will respond again. Okay, so that's the Dow. It's just slowed off a little bit the last week or two. The Nasdaq, well, it's had a bad week this week. It has made new highs the week before that. Volume's not really telling me a huge amount at the moment, so there's really nothing to me untoward there in the Nasdaq. And the S&P, again, probably a little bit more dowish. It's come back quite a bit. There's been a bit of selling challenge there. Momentum has slowed a bit. So we're just a bit wary of those overseas indices. So remember, we've had an amazing year. And these are really outperforming times we're at. So we don't want to get complacent. We want to be very careful and monitor all our stocks at the moment. So I can't impress on that more at the moment because it's so important. Okay, now the ASX 200. Well, it's been having a nice little run this year from 6,800 up to nearly 84. So it's been really good. It's making a new high. Nothing untoward there. It's well above its average, up its sort of uptrend line there, and looking like it's been in good form. So the ASX 200 looks okay. Copper we know about. We're long-term bullish on this one. We would wait for the break of R1, but for the moment it's just dawdling around, not really doing much or inspiring us at all. No trend, no friend. Okay, gold, well, it's still on an uptrend there. It's just hesitated a little bit at the moment. Whether it turns into a rout, we don't know yet. Still looks okay to me at the moment, holding all those things like averages and trend lines and higher highs and higher lows. So that looks okay at the moment. And Brent crude, well, it's just still pottering about above that support level. The buyers are just desperately trying to hold it above there at the moment. And so far, so good. So we'll wait and see what happens. But for the moment, nothing for us on crude there. Okay, so now we can go and have a look at a few stocks. Okay, so firstly, I just want to go through my little Christmas hamper at the moment. Just highlighting the simple technical picture of these stocks that have run so well. They've really just been trending so well indeed. And we know IAG had a big downtrend accumulation and now uptrend and is now back at its all-time highs here. So naturally, what we are doing is we are tightening our stop in here. This is a natural resistance level. It's hesitating. So we move our stop up, just protect our profit. That's all. We've had a great entry since Start of this year, May 2003, down around 530, is now above 840. So that's been a great one for us. IAG this year, slow and steady performer. Pro Medicus, we all know about. It's just been like a rocket, but we're still in there. We're still managing with our stop position at the moment. Our latest entry was at $100, and who would have thought in April of this year that PME was $100 and was now going to be $260. So there you go. Anyway, that's a great story, and we need to make sure we lock in that profit there in Pro Medicus. Commonwealth Bank's another great story. So it's a rally of disbelief, this one, as the Commonwealth Bank just keeps going up and up and up, and defying everybody's ideas. So, I mean, for me, I don't reason why these things, I just follow them. So we're still in CBA at the moment. Stop is tightened. We got in above the break up here in December last year, above 109, and is now around 160. So that's another one for our Santa bag. And the final one was Technology One, which is also a complete rocket since May of this year at 1680. It is now up around $32. And it really has been a sparkling performance from T&E. And again, we're still in that one, managing it with our stop loss. Okay, so there's a few stocks that we've liked this year that have done really well for us and performed really well, surprised us all after the sort of the sideways period, and they break up and off they go into their little run of higher highs and higher lows. Okay, a couple of other stocks I want to have a look at briefly. Aristocrat Leisure has also been a great performer this year. Very few pullbacks in this trend since it broke above $47 there in June of this year. Is now around $68. Above the average, it was just a simple breakout to new highs. We took here a new all-time high, and it just went boom straight away, and so we just followed that up with a stop. All this looks good. The average, the volume is still great, momentum is still great, so its trend intensity rating is still strong at +8. JB Hi-Fi, another rocket one. It's just been a great stock. It's mounting its challenge on $100. You're getting there ever so closely. Above the average, volume is good, momentum is good. Again, it's just been a great performer. Raise your stop and follow those ones. These times are rare, so when they are there, we try to make money while we can. Okay, so that's JB Hi-Fi. One of the prospects I'm looking at the moment is ResMed. I haven't looked at this much for a long time because I haven't really been involved in this stock because it never really gave me any signal here. But that's no problem. We just haven't done anything there. And plenty of other stocks we've been looking at which have had more certainty for us than we've done things. But the certainty of ResMed making a new high is something that we would look at. So although it's made a big challenge from $22 to $37, it's hesitating up here at the moment. It may get through, it may not. We don't know when or if. But if it does, you would think it's probably going to have a pretty good rally from here. This is an all-time high up here for ResMed. It's been a long corrective phase that it's happened through. It's now back to those highs. It's rating at -2 in that neutral zone, which is where we like it. So certainly something to watch, ResMed. I know a lot of people like this stock. I have great belief in it. So it got knocked about pretty badly during that 22-23 period. And it's just been a slow recovery then, but it's here, and who knows what's going to happen, but it's certainly worth keeping an eye on. Some stocks today, look, about 2/3 of my stocks just aren't in. They're downtrending or going down, and stocks like BlueScope Steel, similar sort of stock, really hasn't done anything for a long time. Let's just go back and have a bit more of a look at it. So we can see what's happened here. Had a huge run here back in 2020, 21, 22, and since then it's really done nothing, and it's struggled up around this 24, 26 area here. It's rode up to here. Now it's starting to look a little bit crumblish as it starts to break below this support here. So I'll just blow this up a little bit and you can have a look at it. We've got a failure at the highs here, another failure to make a high here. So this puts in a lower high, and now we're looking potentially at lower lows. So that's really just an analysis thing. Certainly something that the odds aren't favouring BlueScope Steel. The trend intensity rating I think is probably -5 or something. It is -5, so it's looking very weak. So these are just the stocks we don't need to get involved. We just stay away, let them play out, go down, have a trend reversal, whatever they're going to do, or make a new high above 26. But for the moment, it really is a stock that you don't want to be in at the moment. So that's BlueScope Steel, and there are plenty of stocks looking like that. Okay, now Wesfarmers is a stock that we had a great trend in the early part of this year. We got into the late last year and it rode up to around, got out about $68. Now the market has recovered in Wesfarmers. Now we're neutral, where it's recovered. It's pushed up to its old high here. Now, if it did get through there, that's a re-entry signal for us to re-enter this stock. But it hasn't happened yet. It has hesitated a little bit there. So we're just really sitting here waiting and watching. We've locked in our profit on Wesfarmers already, and we're now neutral. The trend intensity rating is neutral, so we're just waiting and watching. But it is a great stock. We can see the buyers are having a bit of a go here, and momentum is still positively above zero. So a new high here would look pretty good, I would think. So would certainly resume the uptrend. So we'll wait and see what happens with that. It may not get through, but we can just keep an eye on that one. The other one, Rio Tinto, which again another one I haven't looked at for a long time. Reason being is it's been going sideways, and it really doesn't interest us a great deal. I just thought I'd sort of have a quick review of it, basically, because we've got this big old high here, which is now providing support for Rio. This is the big trading range we are in at the moment, but we've got a little bit of support here, which is sort of interesting. Sort of high support here. You'd expect this to come back down towards the lower of the range here, which gives me a sign that it might be able to strengthen the buying at the moment. But we sort of need to break this little lower low, lower high thing at the moment, which it's trying to do at the moment. But it's probably something worth watching, Rio. It is a very concentrated iron ore stock, and I know iron ore has been down for a while and not expected to rally much, but stranger things have happened. So we'll keep an eye on Rio. It is -4, so it's nothing fantastic at the moment, but it's probably worth just keeping an eye on it for the moment. And again, down here we've got mixed and neutral on the momentum and the volume there. Okay, so that's Rio Tinto. Nothing really yet, but just keep an eye on it. And the other one I want to look at is a smaller stock for you, just to finish off this year, is Regis Resources, which for mining stocks follows some fairly classical technical behaviour. Big downtrend followed by a big accumulation phase across there. And now we're moving into an uptrend phase as we break out of this accumulation phase. So it's quite an interesting stock because it didn't really perform much while gold was rallying, but this year it's gone from about 150, it's now 270, and really we've broken clear of this big accumulation pattern, and I would expect this to continue rising. That's my expectation. Doesn't mean it's going to happen, but it's certainly a trend worth following, I think, because of what we've got below here. We've got some great volume down here. Momentum is very positive. So certainly one for the small cap market if you're interested in that area. Regis Resources, I think, is a bit of a goer. Okay, now, so there are lots more stocks on the radar there for you to look at. I'll be trying to update the trading centre throughout the Christmas period, New Year. There will be no newsletter this month. There'll be no YouTube video next week, but I'll be back in early January for a video. So that's where I'm at with all the updates for you at the moment. So I hope you have a nice Christmas and quiet break. But firstly, what I want to get into is a couple of little things about what makes markets move and human behaviour. So in our quest for glory, sometimes we ponder the reason prices move. Gaining an edge in an imperfect world is hard, but when we think about it, although the world is always changing, we as humans never do, and that certainly provides an edge for us. So measuring and assessing price action is also an imperfect world on the micro level, but on the macro level, patterns appear. Near certainties occur, trends develop, and waves of repetitive human energy sweep over share prices. The events themselves are of small concern. It is the human responses that are the guiding force for us, okay? So tapping into it is tricky, but it's not impossible. So to capture the similarities of price behaviour requires a process supported by discipline, all wrapped up in a safety net of risk management. They're the main ingredients we need. But as a start, our focus must be on identifying and capturing the human behaviour that makes markets move. What are the things that trigger human behaviour? Okay, so what makes markets move is what we're sort of really interested in, okay? There's all sorts of different ideas and thoughts, but really it's human behaviour in the end, and human behaviour doesn't change, and that's a big advantage for us. So what triggers that human behaviour? What are the main things? Firstly, black swan events, collective investor forces, or expected outcomes. Okay, black swan events matter. They are important. Everybody says to me, it's a strange thing, everybody says to me, what do you do about black swan events? And I go, well, black swan events occur all the time. You know, if you're going to trade in the stock market, you've got to be prepared for that and know how you're going to behave, because if you don't, you're in trouble. So black swan events are things that are there, they occur all the time. Nothing goes along normally. The expected outcomes, number 3, there rarely happen. So when analysts or economists make assessments for next year's inflation rate, interest rates, GDP. Often they're wrong. And why are they wrong? Because things happen in between that we can't occur. So expected outcomes really don't happen that often. Black swan events occur all the time, and they matter because they are market-moving events, and we respond to that. We behave a certain way. There are collective investor forces, and they are amazingly perceptive. As a group, when we buy and sell shares, we can be quite perceptive about things. We wonder why prices are going this way when things look doom and gloom. So investor forces are amazingly perceptive. So black swan events are powerful market movers. So they occur all the time. There are little ones and there are big ones. What they are is unexpected events, unexpected by the market. They're black swan events. Black swans are the big ones, I suppose, and unexpected are the small ones. Collective investor forces, well, they move markets and they cause behavioural trends, which helps us analyse price movement. And expected outcomes have little effect. So if we get the expected outcome, it's very rarely going to move prices. Okay, so that doesn't really make markets move. So really, black swan or unexpected events occur all the time. We just don't know what they will be. It doesn't necessarily matter too much. It matters how we respond to those things, and humans behave the same way. The good news is human behavioural responses stay the same. And there's an interesting book called Same as Ever, written by Morgan Housel, which talks about the sameness of the world, which has been the same for years and years and years. Things change like economies and technology, but humans don't change. And that's the interesting thing. And that's why stock markets behave the way they do. In the same way all the time. So it doesn't matter if humans behave the same way all the time anyway. Does it matter about black swan events if they're going to behave the same way anyway? The same way is going to be in fearful or greedy natures. Okay, so analysis is then best focused on how humans behave in each circumstance. So it's not the specific event so much, it's the effect of this specific event. So that's just thinking a bit about how you respond when things occur, black swan events occur, and trying to understand that, because often we do behave in the wrong way. Okay, so that's just really want to touch on that a little bit there, on human behaviour and what the importance of it is, and how it doesn't change so often. So and how we think about markets and black swan events is an interesting thing. Okay, so what's happening in Stockradar? Well, I mentioned I won't be here next week for YouTube. I'll be here early January. No newsletter at the end of Jan. That'll come out. Sorry, there's no newsletter at the end of December. That'll come at the end of Jan, and I'll keep the trading centre going. Okay, so that's about it really all I've got for this year. It's been an amazing year for Stockradar and hopefully for my members. And you know, for those interested, please come on board and have a go. It's an interesting world, an interesting challenge, trading stocks. But it also can be successful if you do it the right way. It's just a matter of knowing sometimes. So, when tackling market forces, the starting point must be an understanding the core of what drives price movement. Calm plants the seeds of crazy. So when I'm talking about market calm, what that is doing, that is planting the seeds of market moves, and that is often triggered by a black swan event. So calm plants the seeds of crazy, which is sort of weird, but that's what happens. Black swan events, both major and minor, occur regularly and are market moving events. Understanding the similarity of how we behave in response to these events suddenly makes the black swan events not so hard to understand, because we know how humans are going to behave. Yet we often make the same mistake of responding to fear and greed in exactly the wrong way. Why? Well, this is where discipline is so important, in allowing you to respond your right way rather than other people's wrong way. Rather than being a bad thing, suddenly black swan events can be a good thing if we focus on how investors are going to behave, not focus on the specific event itself. Okay, so that's all really I've got for today. I'll probably talk about this topic a little bit more in the future, because I quite enjoy talking about this to you, because it's important to understand what we're trying to do and what we're trying to capture, because really it is the behaviour of the investor that drives these markets that we're trying to capture all the time. So I hope you all have a happy Christmas and happy New Year. Watch your trends, heed your stops, stay safe, make sure you have fun, and I'll see you all in a couple of weeks. Thanks very much.